Good evening, everyone, and welcome to the Newark Land Bank's in-depth review of the Resident Advantage and Pro-Newark Land Bank programs. My name is Marcus Randolph. I'm the president and CEO of Invest Newark. Invest Newark is the economic development corporation for the city of Newark, and we have the honor and privilege of managing the Newark Land Bank, the only land bank in the entire state of New Jersey. Since its inception, the land bank has successfully put some 80 projects or have plans for them parcels back into productive use in the city of Newark. We're proud that we have created home ownership opportunities. We have hired NWBE contractors. We put nearly $2 million back into the local economy just based on those contracts alone. We've helped eliminate blight. We've beautified neighborhoods. And as we embark on our second tranche of sites turned over to us from the city of Newark, there's no better time than to have this webinar. Some 400 people have registered for this, so we're very excited about the interest that the land bank continues to generate. Hope that you find tonight's session informative, useful. We look forward to your questions, providing answers, and getting your feedback. Again, thank you for participating and taking time out tonight. And with that, I want to turn it over to Martha Baez, Senior Vice President for Land Bank Operations. She will guide you through the rest of tonight's presentation. Thanks again for coming.
Thank you, Marcus. Good evening, everyone, and thank you for joining us in this exciting webinar. We will have a lot of information regarding our Resident Advantage and Pro-Newark program, which are two of the existing homeownership programs that we currently offer for the land bank. I hope that you came prepared to learn and ask questions, as we have very important information. During the presentation, you can write your questions in the question and answer box, and we will have a session at the end of the presentation to answer all the questions that we can in the time that we have allotted. So we can start to see what the content of tonight's presentations will be. Marcus Randolph, that just spoke, President and CEO of Invest Newark. My name, as he said, is Martha Baez. I'm the Senior Vice President of Land Bank Operations. Also tonight, we have Roger Johnson, who's the Senior Vice President of Real Estate Development, and our two guest panelists who will share information on 203K loan process, Joel Akambi and Elisa Gill, who will guide us through the inspection process for the properties. Tonight, we will discuss in depth what are the features of the programs, Resident Advantage and Pro-Newark, the eligibility and how to apply, things to consider when evaluating a property's potential, financing and rehabilitation using an FHA 203K loan, budgeting tips to keep in mind, program timeline, and two properties that are currently available are going to be shown tonight. Let's go through the land bank priorities. And the most important priority for us is boosting homeownership throughout the city of Newark, reducing blight, creating affordable and market rate housing, increasing minority and women business enterprises capacity, expanding neighborhood business opportunities, increasing property values, supporting community goals, and improving the quality of life for all Newark residents. Some of the opportunities that we offered at the Newark Land Bank are equitable homeownership. Within the homeownership programs, we have the Section 8 program, which is geared for Section 8 voucher holders who would like to purchase a property by converting their renter vouchers into mortgage vouchers and using a down payment assistance. Qualified Section 8 voucher holders initiate the process through the Housing Authority. Once they are qualified as mortgage vouchers, then they can come back to the Newark Land Bank and apply to purchase a property. The Moving Ready program consists of properties that the Land Bank rehabs and offers for sale to first-time home buyers who wish to move into a property in the city of Newark. This program is for anyone resident or non-resident that wish to move into the city. The Pro-Newark program is also for first-time home buyers wishing to purchase a home to renovate and occupy. So this program is also available to anyone that wishes to move into a property in Newark, resident or non-resident. The Resident Advantage program, as the name suggests, is exclusively for Newark residents that wish to purchase a property to renovate and occupy. We also have a side lot initiative. Undersized lots are sold to contiguous owners and they can, for a nominal price, and they can use these lots to increase their yard space, install a driveway, or add an addition to their home. This can enhance the value of their property, as well as beautify and improve the appearance of the entire neighborhood. So it's a really good program. Some of the advantages of purchasing a home to rehab, we identified one being building equity. And the way that this works is that it's good to build, you can build the net worth by acquiring a property from the land bank that you buy at a significantly low cost. After you complete the improvements, it gives you room to have an increased value on your investment, because this can allow you to increase the net worth that you possess and also help you with refinancing or borrowing money against your property. Another advantage of buying a property to rehab is personalizing the property that you're rehabbing. You can choose your own colors, the way that you want your facade to look, or cosmetic improvements throughout the property. And most important, it helps the community by improving the value of other homes in the area. Let's go through the qualifications of the Pro-Newark and Resident Advantage program. As we've been saying since the beginning, you must be a first-time home buyer to be able to qualify to apply for this program. You must reside in the home for a minimum of 7 years. It's important to prove your ability to finance the project. At a minimum, the cost of the acquisition of the property, the renovation cost, and also a 10% reserve amount. Applicants also must hire a contractor to perform the rehabilitation of the property. And we always sell the property to the most qualified buyer. And when I say the most qualified buyer, we only don't take into account your financing ability, which is very important, but also the overall qualifications that you possess, you know, how well you'll be able to improve the property. And before you are able to apply for a property, it's important that you register on our website. If you go to the website, you can click register on the right-hand upper corner, fill out the registration form. Make sure to go through each of the questions on the registration form and complete it thoroughly. After you complete your registration, you will get an email from us asking you to verify your email. And that way, after you verify your email, you'll be able to apply to purchase any property on our website. It is important that you verify the email, because if you don't, you're not going to be able to complete any application. Also, please make sure to read under the resources tab our policies and procedures, which will help you determine you know, what are the requirements to purchasing any property through the land bank. After you complete your registration, you're ready to apply to purchase the property. The second step is completing a property purchase application, which can be found within each property. When you click on a property that's available for sale, you can see the apply here button. You click on it, complete the application, the purchase application, and pay in a non-refundable $50 fee. The form looks like the one on the screen, basic information, name, address, some demographic information. We also ask you about your intent, what you plan to do with the property in terms of renovation plans, if you have an idea. And after you complete that form and pay your fee, you can submit the application. The third step is for us to review the application, and then we reach out to the qualified applicants to inspect the property. At this time, the land bank will contact you and ask you to schedule a time with a licensed contractor to go and walk through the property and determine the condition of the property. And the contractor to help you develop a scope of work and give you an estimate of what it will cost you to renovate the property. Once you complete the walkthrough of the property and you decide whether or not you want to continue with the process, then you let us know. Should you wish to continue with the process, we will send you a bid package. A bid package consists of a completed bid form, which must be signed, dated, and notarized, just like the one on the screen. The bid package also includes a scope of work and a budget. This must be completed by a licensed contractor and submitted in the bid package along with the licensed contractor's license. And thirdly, you need to show proof of funds. If you plan to finance your project with your own money, then we need a bank statement proving your funds. Or if you apply for a loan, you need to provide us with a proof of pre-approval letter. So that concludes the process of qualifying and applying for a property. I'm now going to pass it along to Elisa Gill, who is a licensed contractor with over 26 years of experience. She currently also is one of the qualified contractors that works with the land bank. So she's gonna walk us through the process of evaluating a property.
Okay. Hello, good evening, everyone. Thank you, Martha. I didn't put this on these slides. My name is Elisa Gill. I am a local minority, I don't like to say minority, MWBE, a licensed general contractor, a local in the city of Newark. And I've been working on projects and rehab projects of all sizes, mid-sized projects, large development, and rehab properties, fix and flips over the last 20, 25 plus years. And I am here today to answer some questions for you and to promote minority contractors to get involved with the Land Bank and Invest Newark. They're a wonderful organization. Sometimes the documentation and everything to get qualified with some of these government entities are difficult. They made the process painless. They're very helpful, and I was able to be successful in completing the application and the approval process with them. So I'm here today just to tell you guys a few things about 203K loans, how they are structured. I believe that's the financing that we're going to be using for these projects for some of you homeowners. And just to give you an idea of what to expect on the walkthrough and what you should be doing when you want to evaluate your property yourself. Identifying the properties. Some of the properties are dilapidated and very poor condition. I would suggest that you just open your mind and dream and have a lot of vision when going into the projects. As Marta said, you're able to choose your own colors, design certain things for yourself, your flooring, and really put your own touch on your own property, along with the contractor that you choose to work alongside with to really come out with a beautiful product that you'll be able to enjoy with your family for, however long that you choose. So I would say for number one, I would say to conduct a visual walkthrough inspection, on site with the contractor and yourself, the potential owner, just to get an idea and get into the property and get a feel for the property, the structure, the size, maybe the lighting, if you wanted to open up and add additional windows or different things like that. That is the time where you can express to your contractor what your vision is for the property. No matter what condition it is, once it becomes yours, you can tailor it to, to fit your own and suit your own family's needs. I would say you express to the contractor what you want to renovate in the home. Why I say that is because it's not up to the contractor it's not up to us, myself as well, contractor, to determine what your budget is, what you like about the home as it is, and what you need to change. It's my job to give you suggestions on what I think the life expectancy is on some of the appliances and maybe some of the framing and some of the flooring. But at the end of the day, if you like the old woodwork and you like the old flooring, I suggest that you ask the contractor, how can you restore some of those materials for yourself. The contractor will then measure out the property and determine the cost of the renovations and the labor to complete the work, and should be able to give you an estimate based on the square footage and the type of materials that you choose to put into the home. I would say that the next step would be that the contractor will inspect the integrity of the beams in the foundation and the condition of the subfloor and the existing utilities in their lifetime. Why? Because a lot of times we cannot see what's underneath, especially if the home is lived in or the home is unable to maybe enter safely, because I've done some projects like that where you really don't know what's behind the walls until you actually complete your demo. And then at that time, you have some changes that may occur that were unforeseen items, that you may need to address at a later time in the budget with the contractor. So you want to leave room for contingency. And then before adding any additional lighting or appliances, if you say you want hi-hats or, extra ampage or different, I would say, some people put dryers and different things that require outlets that are larger than what is existing and the panel can't hold them. So I would say that just to make sure, so you don't have the additional costs, to make sure that your electrical service existing is able to support any upgrades. The next thing I would say is to sign a written contract with the GC regarding the timeline and allocate for changes, the completion of your project as well. Discuss an anticipated moving date, because they may not know that you have a sense of urgency and now you would need to move out of your current home or break your lease because maybe you don't want to pay another additional month rent and you would like to be in your home by this date. Maybe you've only budgeted for a few months. So I would suggest that you get a clear understanding as to what the timeline needs to be for you. So that way you guys can work together to meet that timeline. I think we covered that. Marta, give me 1 second. Okay, the next one is to find the right contractor. Okay, it's not a wrong contractor. I would just say that the contractor that's right for you. I would say identify the contractor. You're going to be working with them. Your needs are important. Patience is important. You're a first-time home buyer. Understand exactly what you need and what it is that you're asking for. So I would say that just the main four main points I would say is make sure that you get a certified copy of the contractor's license. Even if they have the license present on hand, they have a certified copy, you can go to the state of New Jersey website and you can verify whether or not the license is active currently. And it's just a matter of putting in the name of the construction company and it should come up. The other thing is the proof of insurance. Also, you can also verify the proof of insurance as well. Most of the time, the Department of Community Affairs asks for a copy of the current license, and it needs to be on file before a contractor's license is being reissued, and it's issued annually. So each year it should have an expiration date as to the next renewal date, but there are 1-year increments. The next thing I would say is ask for the 3 most recent projects. You know, sometimes in this business, especially in the pandemic, we work, you know, fearlessly, day in and day out, and then we have a lapse in projects, right? And then sometimes contractors, they're not in the business, actively in the business, and they may not have worked for a couple years in the business. But I would say that a contractor that is active, even through at least within the year, within the past year, should have a project or 2 that they should be able to allow you to see, maybe have a portfolio for you, or have a recommendation of another homeowner that they've repaired something in their home equivalent to what the work that you're trying to have done. And the other thing is, ask if they've completed a 203K project in the past. It may be someone that you know, right? Don't get me wrong. You may want to use this contractor if you used them before, but understanding the 203K process can be challenging for most small minority contractors. Some of the reasons are, you know, 50% of your monies have to come out up front and be put into the project prior to being reimbursed. Then we have the third-party HUD inspector that regulates, you know, the entire process, and the timeline is not totally up to the contractor. So we can all be working together to meet a deadline, but then we have variables. We have building inspectors that come at different times during the course of the project for different trades. And you have an electric done, plumbing done, you know, building, which monitors the sheetrock and the windows and the doors and the roof. Those people normally, if you can get, you know, a good day, you can get a few inspectors out at one day, you know, at one time. But most times, you know, we're sitting there at the property waiting, and their schedule is very hectic, especially, you know, in urban cities where it's a lot of activity and renovations and purchasing happening. They're just not available. So I would say that allow time for that. And then the HUD inspector, you know, adds in another piece, because before you're able to move on to the next step, after everything is inspected, then he has to come back out and you know, regulate everything. But the good thing about it is on the 203K, the HUD inspector regulates the contractor for you, and they protect the interests of the bank. When I say regulate, I mean, like, you know, they assure that, you know, the contractor's on schedule, they're following the scope of work that was put together by yourself and your HUD inspector that you'll be assigned for the 203K. There's some things that Jola explained to you in more detail about the process of the 203K. I'm going to, try to stick to the general construction points. Okay. Let's see. We have professionals, the people that you plan to hire, the professionals that you engage. Let's talk about the architect. You do not need an architect to renovate your home if it is the exact existing floor plan that matches the existing floor plan that is there of your property. You will need to engage an architect. If you, for instance, move a wall, increase the size of your bathroom, not so much the layout of your kitchen, but if you move the sink and the plumbing and the gas to another location. Let's see, if you add a bedroom, add an addition, not, you know, siding, roofing, structure. If you raise the roof to increase the height in your bedroom in the back of the home, anything that's not existing to match the existing floor plan, you will need to engage an architect. If you take down the porch in its entirety, you're going to have an architect that's going to give you a drawing that's going to tell the contractor exactly how to put that porch back to meet the building code to date. Your porch may have been something that was built 70 years ago. Today, the construction of a porch is a lot different. So that's something that would take consideration. Of course, the licensed general contractor. Let me see. Again, preferably one that is familiar with the 203K process, only because it's your first home, it's your first project, and you want the contractor to be comfortable. You don't want any, you don't want a stressful environment where they were unaware of the challenges or the procedures and processes that take place in a 203K versus a traditional rehab. So you guys want to have open line of communication, a clear understanding of what the expectations are. And if they're not approved, they can still get approved. They can still apply with the lender at the time of engagement. And the lender, as long as Joel will talk about this, I think as long as they have, I think he said, a license, a general contractor, a proof of insurance, and I think that's it. I don't even think it's recent projects. But so yes, if you know someone that is not familiar with the process and willing to go through the process with you, then yes, by all means, you guys walk together and deliver a beautiful product. So we have home inspection. The home inspector. So these are some things that I do now as a normal business practice when I take on a project. Hold on one second. I want to get something for you. I need 1 second. Pardon me. Okay. Sorry. I wish I could see everyone. Okay. These are some things that I do now. It's a part of my normal reasonable business practice. Home inspector. As soon as I take a job from whether it be public or private sector, for myself as a contractor, I get a home inspection. Why? It's not my property. I always ask for a phase one. I need to know the history of the property, whether it's environmental. The home inspector does a radon test for me. They do a structural foundation integrity inspection for me. They do a termite, because if the home has termites and I go and build up a whole new porch, what they say is that the termites can just go attack the new wood and the infestation just could, recreate itself or become a problem for the new structure that I just built. And one of my contracts, if I'm not mistaken, said that if the termites are there and they eat the new building, then I'm responsible for the building if something happens to it and to redo it. So I just wanted to make sure that if it was pests there or anything present, that I made the investment, I think it's about $325, to just get it remediated and just to get an overall view that I can share with the owner as to what I see. Now, some people may say, why you get a home inspection and the house is falling down? Well, the home inspection is just for those other things like the integrity and the structure and the foundation and the radon and the environmental. And he'll tell me if it's an oil tank on the property, and then I can address that with the owner if they would like me to facilitate the removal of it or what they would like to do with it before we proceed, because I have a landscaping line item in my budget, and then I go and put all new grass and all new flowers and everything's beautiful, and then we have to rip out an oil tank and destroy, the cosmetic look of the property after it's all completed. And that will happen normally when it transfers to a buyer after it's renovated, like some of you on the call, where you want to make sure that you're buying a property that, if it has an oil tank, it's not a terrible thing. You just need to be aware of what is there on the property. And I would just use this as, like I said, like just a basic to do, even if you're buying a property from a realtor. I'm a licensed realtor and broker. I see it all the time. I recommend it to my clients. the oil tank service is a norm. I think that people are doing now. Just get the oil tank inspection. No one wants to buy no one wants to buy a property with an oil tank underground anymore. If it's been abandoned, it's not used, and oil is not currently being used to heat the property, then my recommendation, and it's not always cost effective, is to just first do a tank sweep. Tank sweep is $325. That'll let you know whether or not it's even an oil tank on the premises. Next, I would say do a soil test. If you do find an oil tank, that's testing the soil for about another $300 to see if the tank has leaked. If they find oil in the soil, then what will happen is they will tell you that it's a probably 90 to 95% chance that the tank is leaking. That will go into a remediation estimate, and they can very well give you that. I'll give you a tip. I have some companies that say, I'll do the test and I'll give you a flat fee now. We don't know if it's leaking or not. I'll give you a rough number, $7,500. We'll take it out and do the remediation. That's a risk you take, because when they take it out, if it's not leaking, the cost is about 50% of that, maybe $3,500, $1,800. Then you have the test, then you remove it. Once you do the soil test and you find oil, you can kind of smell oil in the soil, the dirt. I would suggest you go to flat fee, because that number for remediation can range anywhere from $7,000 to $70,000, depending on how bad the leak was, how much oil was in the tank, and if it traveled on to the adjacent property, or it can get really messy. Or if you do the soil test and you have no oil in your soil, you go with sand. The problem with that sometimes becomes when a new person wants to buy the home, they would rather it just be pulled. Fill it with sand is about a couple $100 difference, but you still run the risk of when they're pulling it out, if it's an evidence of any kind of crack or compromising of the integrity, then they're probably going to say that the inspector is going to come out from the city and you're going to say most likely it's leaking. So you don't want that. You don't want that surprise cost at the end. So that is the spiel for the oil tank service, and why $300 can save you a lot of problems. The camera inspection, that's something new that I just started. I'll tell you a story. I did a renovation. It happened to be a property that was purchased from the city. And sometimes these properties, they disconnect the sewers and the services when they're getting ready to be condemned. So in that case, you need to do those inspections, because a camera inspection, again, is $300. They'll be able to tell you if it's any cracks or anything in your sewer line. And then at that time, you can address it with the owner to remedy it, or even possibly, get a discount, or maybe even get them to repair it, because that will cause backups in your home. And that sewer will cause you a lot of problems. And it's very costly to repair on your own. I would say upwards of $16,000 to start. If you know someone, it could be 10, but it's costly. And that's it. Oh, architect. No, you did. We're done. Oh, land survey. I would say just had an issue. These are things that I would definitely recommend, because these are things that have happened and transpired on certain projects, if not my own, someone else's, in the past year. This survey went to build an addition on a project, and looked to me like the person on the left, they had their driveway coming over a little too far, and now my foundation footprint wouldn't match. And I would be unable to build my foundation and my addition on the home, which would interfere with my project. I ordered a survey at my own expense. The survey came back. Yes, they were in fact encroaching the property by about 10 feet. They had irrigation going on to the property. It was a big mess. So I would say survey to understand your property lines to your neighbors. And that's it. That's it. I think, yeah.
Thank you, Lisa. That was very informative. So let's move on to the next topic on our agenda. We're gonna have Joel come and talk to us about the 203K loan process. Let me move the slide so Joe can come on in.
Oh, yeah, okay. Those are some just before and after pictures of what you should expect from your home when it's finished.
All right, I'm gonna give it to Joe. Thank you.
Okay, thank you.
All right, good evening, everyone. I'd like to thank Invest Newark for the opportunity to educate the viewers here this evening. My name is Joel Akambi, licensed loan officer. I've been a loan officer and loan processor for over 20 years of experience. So I've seen a lot. I've helped a lot of people, and I'm glad I have the opportunity to simplify and clarify the loan process if you're acquiring one of these homes from Invest Newark. First, I want to start off with the pre-approval process. When you're going to a loan officer for to see if you can qualify for one of these properties, you're going to have to provide income. You're going to have to provide your credit, as well as to show them the liabilities that you do have along with the assets. So a 203K loan basically is a rehabilitation loan that the government allows you to, rehab the property. You can't go put in jacuzzis or swimming pools in the property. They want, you to basically to focus on structuring the structure or whatever cosmetic repairs that need to be done. Another thing that you also need to know when you're applying for a FHA 203K loan, you need 3.5% down towards the property, towards the total loan amount that you are purchasing the property for. That includes the rehab budget. Next, Martha, I'm not too sure this in regards to the next slide. Okay, yeah, there we go. All right, so definition of a 203K loan, I touched on it. It's a government program that gives you the opportunity to rehab a property and, with the advantage of gaining equity. Some lenders will allow you to go up to 110% of the total value of the property once it's done. So that means, if you're, for example, if your total loan amount is 100,000, they will allow you to go up to like $110,000. So you multiply that, if the numbers are higher. So the one thing that, meeting with Invest Newark, I told them, from the beginning, I'm very passionate about what I do and being able to educate the people that come to me when they come for a 203K loan. A lot of people think it's just a regular loan. It's just, I'll deal with it once we, close. But I've come to find out it is so important that as the borrower, acquiring one of these loans, you have to understand the language of the contractor, the HUD inspector, as well as, the bank, how everything works. So, finding the right contractor, as Lisa touched, you have to have a license. The contractor has to be licensed, and they have to have their insurance. And then the bank will basically, approve them. But it's very important that, you can't hire a brother or a sister or, a relative, that has the same last name and say that, hey, my brother, Joseph is going to do the construction. The lender will not allow that. Conflict of interest. Understanding the role of the HUD inspector. So a lot, we've said the word HUD inspector a few times. So when you're applying for a 203K loan, the HUD inspector comes and he is basically the third party that protects the bank. So you might have a contractor that'll come to you and say, okay, I'm going to charge you $100,000 for all this renovation that needs to be done. And then the HUD inspector will come behind the contractor and say, hey, listen, you're at $90,000 because this doesn't cost $100,000 based off of, his research. So again, the HUD inspector, you have to, the contractor that you select needs to understand that they are working together with this HUD inspector. Sometimes it's easy to get a contractor for these jobs, but they need to understand the language. They need to understand the fact that they have to, their paperwork has to be in sync with the HUD inspector, because I've seen situations where a contractor would say, okay, I'm just gonna say it costs 80,000, and then now all of a sudden, they need more money, and the HUD inspector is looking at them like, hey, well, you told me this is what it was, and I tried to tell you, you might need a little bit more, but you said you're fine. So these are the things that you have to really kind of pinpoint in the beginning. And like I always tell a lot of my clients, you also need a loan officer that knows what they're doing. You don't just go up to to anybody where they're saying, okay, all right, I'll try your loan to as my first loan for a 203K. It's a unique loan, but at the end, once it's done, it's an amazing loan to qualify for. The length it will take how many times to call a HUD inspector. There are lenders that will tell you that they'll give you up to 5 times that you can call the HUD inspector out. Please keep in mind, right? When your contractor is strategically, and he's supposed to strategically do your itemized bid, when he's doing that itemized bid, he needs to understand the fact that the bank is giving him up to 5 different times for this HUD inspector to come out. Every time the HUD inspector comes out, he will be charging you. So I've seen situations where the contractor will put up one wall and then the whole room needs renovation still. And the HUD inspector will tell him, hey, I can't give you the money that you are, asking for on this loan until the whole room is completed. So in some cases, if you don't pick the right contractor, and he does not have the money to finish that room out of his own pocket, he will not, he won't get the job done, because the HUD inspector won't release the money to him. I'm gonna, in a little bit, I'm gonna talk about, there's 2 types of 203K loans that you need to know about. You have the full 203K and the limited 203K, but I'll touch on that in a little bit. Also, another cool feature that I've heard people that are in 203K loans that their loan officer never told them, they have the ability to roll up to, I believe it's 6 payments of your mortgage into the loan. Now, the HUD inspector has to determine that within those 6 payments, those 6 payments, those 6 months of your mortgage payments, the house is inhabitable, meaning that you cannot live there for the next 6 months. Or there are cases where you can do 3 months. So if they have to knock down walls or do whatever it is for the next 3 months, you can roll this into your loan. So this is a very, very cool feature that, I find often a lot of people don't even know about. And I always talk to my clients like, hey, listen, because in some cases you'll be paying rent and then the mortgage will kick in and you have to pay the mortgage. So what are you going to do? So use that cool feature when you're applying for a 203K loan. Another thing also, lenders will tell you, you have up to 10 to 15%. I've seen some lenders do 20%, but you have 10 to 15% contingency. What that means is if the contractor tells you that the renovation is 100,000, there needs to be about, let's just say if it's 10%, it has to be about $10,000 left for, I call it oops money, in case anything goes wrong. So the bank is going to want to make sure that you have about 10% sitting to the side. So, also, you have to be cautious about that. Benefits, Martha and Elisa, they both touched on, the good benefits about rehab loans. You can buy a property. Invest Newark is giving you guys the opportunity to get properties at, below market value. You know what that means? That means that later on down the line, there's equity for you guys, and equity means that once you finish the house, the potential that your house is going to be worth more it's pretty high, because at the end of the day, now with that equity, you can either refinance, pull cash out, pay student loans, pay debt, so this is a very good opportunity for, the viewers, to grab and learn. The results of no work completed. So COVID was it was it was strange times. I'll tell you from experience, I seen one deal where I guess the client, the client was having a hard time with getting permits and inspections done from the city, and they didn't notify the bank for a couple months because things were delayed. You have to stay in touch with the lender, your bank. You have to let them know what's going on. Hey, I know I told you guys, for example, hey, I told you it was going to take 6 months, but I need an extra month. So they'll give you extensions. So these are the things, like when I tell you, you have to know the financial literacy when it comes to dealing with the HUD inspector, the contractor, and your lender. Next slide, Martha, please. All right, so I'll try to make this brief, but limited 203K. What that means is that the lender's giving you a max of $35,000 to spend. That also includes your contingency amount. So, for example, this is like you might find the property that might not need much renovation. You spend up to $25,000. It qualifies for a limited 203K loan. Also, keep in mind that if the property is structurally or has like a major renovation concern, when the bank does an inspection on the property, they can convert this into a full 203K. So if they see any structural problems, again, they can convert it into a major 203K loan because of the integrity of the property. To qualify for a regular limited 203K, it's pretty simple. 1003 application, signed disclosures. You have to have a purchase agreement. 203K. This is also important. 203K maximum mortgage worksheet. Sorry. So what this does is like the paperwork that ties everything together so that the bank understands what is going on this property along with the contractor. So remember, when you're dealing with a limited 203K, there is no HUD inspector. So it's only a contractor. And if you guys remember anything, you have to remember the fact that on a limited 203K, when you close this deal, if the project costs $30,000, that means that the lender will, at closing, give the contractor $15,000, half of what the cost is going to be. They will give them $15,000 to do the work. So if you get a contractor that says, hey, James, listen, I ran through the $15,000. It's going to cost me $23,000. Can you give me that $8,000 difference? No. They will not allow, the lender, the contractor can get in trouble for doing something like that. The contractor, and this is what I say, you have to make sure that this contractor is liquid. He has the money to finish the job, because there are contractors out there who say, I'll do it. And then now you're stuck, and you do not want to be in that position. So try to find a reputable contractor is my recommendations to everyone. Also, you have you have to have an appraisal done on the property. That appraisal, remember, these properties that you're getting, when the renovation and all that stuff is calculated, it has to be, it has to match or at least be lower than what the value of the property is going to be. So for example, if the property appraises for $200,000, your work cannot be more than 110% of that value. So, excuse me, the total loan amount cannot be more than 110% of that value. So at the end of the day, you want to find a property that, you know, is good for you. Like Lisa said, you got to do a walkthrough, and then make sure that, you know, once you do all this whole process through the application, the appraisal, the HUD inspector, the bank will pretty much determine, okay, this is, you know, we'll get this loan done and give you the green light to move forward. The type of repairs allowed, I did mention, you cannot go put a jacuzzi, you can't put a swimming pool, you can't put luxury items in the property. However, you can do cosmetic work. You know, you can redo a whole bathroom, you can, you know, get a nice bathtub. So, you know, and then also another cool thing about these 203K loans, you can also include the appliances, refrigerators, dishwashers. Another thing that, you know, when people go into 203Ks, they, you know, there certain people are not telling them, you know, so this is a lot of money, you know, that comes out of your pocket when you're buying a property. Another thing also, again, I did touch on it, the draws and inspections. So everything has to be coordinated with your contractor. He has to structure the loan with, excuse me, the bid, so that when he's calling for his money, you know, he's doing the majority of the work that needs to be done for each draw. So he's not wasting the HUD inspector, or excuse me, or the inspector's time. So in this case, because it's a FHA 203K, the inspector will be the actual appraiser to report that the work is being done. Next, Martha. Okay, so the standard 203K is pretty much a, you know, a repeat. However, it does not limit you to $35,000. So you pretty much, you know, you can go up to 100, 200,000 in some cases. So the same thing again, the full 1003 application, 203K maximum worksheet, the contractor's bid. Again, like I said, the contractor has to be on the same page as the HUD inspector, the appraiser, and then pretty much the same type of repairs are allowed. And again, what's not allowed, jacuzzis and swimming pools. The draws and inspections, you have to make sure that your contractor is maximizing the time that the HUD inspector comes out so that he can get the money back. And that's pretty much it. So I don't want to try to complicate the system, you know, the process for you, because it's a lot of numbers, but when it comes to, you know, figuring everything out, and that's what, you know, my job is in regards to breaking everything down for you so that it makes sense. But, you know, I wish you guys the best. I mean, Invest Newark, you guys are doing a wonderful thing. And again, you know, this is the process of the 203K FHA.
So thank you so much for all that information. I know that we have so much to share. I'm gonna have let Roger Johnson, our Senior Vice President of Real Estate, walk us through some budgeting tips.
Great, thanks, Martha. Good evening, everyone. I'll try to run through this as we're going over our time slide here, but I'll try brief with these few slides. We've got some great information tonight from our guests, though. Joel and Elisa definitely sharing their knowledge of their experience in the industry. So I'm just going to add on to that by sharing some of the budget tips for rehabs. So things to keep in mind: pre-purchase costs, which are also called soft costs. You know, those are things that already mentioned already. Down payment, you got to have money for like down payment, as well as, you know, appraisal, paying for a home inspector, the oil tank sweep, and soil testing, as Elisa mentioned. You know, make sure there's no contamination if there's an underground water tank, and also checking your sewer line for make sure that there's no cracks and it's still in good shape, and then also the closing costs, right? And then next, you want to set aside a contingency. So as mentioned earlier, contingency is used to cover, you know, costs, as Joe says, the oops money, right? So, but you know, anything that you didn't anticipate, that the contractor didn't anticipate, you know, like replacing a pipe that, you know, they thought was going to remain, or, you know, if you want to add something or change something, like making a room bigger by knocking down a wall, or adding a skylight, you know, things that you didn't already have in your budget that you want to add later. It can come out of the contingency. You can pay for it out of contingency. So what I like to do is allocate 10% of the construction cost to the contingency. And so if your rehab cost is 200,000, I would set aside an additional 20,000 minimum on top of that for a total construction cost of $220,000. Next, you want to prioritize your needs, because, you know, you don't want to spend money that you don't have. And, you know, unfortunately, this happens time and time again in rehab projects, you know, where, you know, you might want to splurge on certain things, where you neglect, you know, your budget. And when things do come up and you have to tap into that contingency, then you use all your contingency, and then you might run short of your funds to actually finish the project. So, you know, just keep that in mind. You know, that if you do have items on your budget or on your wish list, you know, like a Sub-Zero refrigerator that's, you know, like $10,000 or something like that, that you might need to just hold off on that until you actually finish your rehab, to see where you are in your budget, where you might need to, you know, maybe find a less expensive appliance, less expensive refrigerator or something like that, you know, to finish up your project. Then also, you know, choosing the right people, as mentioned before, choosing the right contractor. I suggest to get recommendations on the contractors. And then when you do have a few contractors, to ask for their references, ask for references of their previous customers, and call the customers up, ask how the experience was. You know, most likely the contractors aren't going to give you the numbers of people that had terrible experiences with, but even the ones that they do give you, you're going to at least hear them out. Maybe the contractor thought everything was going well, and that customer has a few, you know, nitpicky things that they would share with you, or you know, how things went, that could maybe lean you in a different way. Maybe everything was all positive as well. So, you know, that could lean you, you know, either way. So definitely do that. So, you know, you can try to dodge any bullets with bad contractors. And then also, you know, researching what others paid for similar rehabs. So, you know, that's a question also that you'll ask the references that you get from the contractor. You know, how much, if they don't mind, how much, you know, did the contractor charge them for the rehab? If you're doing a full gut, you know, what was the, you know, price that they paid? If you're doing a kitchen rehab, so on and so forth, what was the price that the contractor paid? So that way you can at least kind of weigh the cost that way. And also, or I guess lastly, with the contractors getting at least 3 contractor quotes, you know, this will help you also be able to gauge on what's a good and you know, price that's out of range or too low. You know, try to schedule for all the contractors to meet you at the house on the same day at the same time, so you can do just one walkthrough there, instead of having different days, because, you know, you might end up telling one contractor something that, you know, you don't tell the others, and so now the pricing is off. It's not apples to apples. Or say the last contractor sees something in the house that the others didn't see, And so he's going to price something different than the other one. So it's good to have all three of them there at the same time, so everyone is on the same page and can give you, similar pricing. Next slide, please. Yeah, so this here is an additional resource for the Live Newark Home Closing Cost Program. This is a program that the city of Newark has that offers up to $10,000 towards your closing costs. It's a grant, forgivable grant that over 5 years, 20% of that $10,000 is forgiven each year. So if you live in the home for the full 5 years, that $10,000 is forgiven. And the link to the website is there. You can also Google Live Newark Program also to find it. Next slide. Yep. And here we'll just close on the rehab timeline. So when you purchase a property with the land bank, there's going to be a timeline associated with completing the rehab, right? The reason we do that, as Martha said at the beginning of the webinar, that we want to eliminate blight. And so we want to make sure once the property is sold to you, that it's actually doesn't just sit there in the same condition as a vacant property for long time after that. We want to make sure that the project actually gets started and gets moved all the way to completion. So people on our staff here, they'll do a 30-day check-in, 30 days right after closing, to make sure that you are working on getting your permits submitted. We also do a 60-day check-in, then a 90-day check-in, and then we'll do some check-ins periodically after that, but then also 30 days prior to completion. So along with your bid package, as Martha said, you would be submitting your schedule to us, and we'll be following along in the schedule. And you just have to kind of stay in touch with us, provide us updates, communicate with us, similar to what Joel said about staying connected with the lender. You want to stay connected with the land bank to let us know how things are going, and if you need any extensions to the time frame, because we do have a 12-month time frame connected with all the properties for the completion. Next slide.
Roger. I think next slide, we're just gonna show we have 2 properties that will be open for sale right after this presentation. One is a Resident Advantage property, 93 3rd Street. And the other one is a Pro-Newark property. It's 249 South 18th Street. So you're welcome to log into our website, look at the properties that we have available. So right now, we right after the presentation, I'm gonna have those properties open for sale. I know everyone is not probably ready to apply to purchase a property, but I think this is the time for you to start looking into the process, getting prepared, getting your credit in place, shopping for loans, getting all the information that you need to qualify to purchase one of these homes and other homes that we will have available very soon on our website. I suspect that for the beginning of the year, our inventory is going to be, we're going to be adding new properties to our inventory. And one of the reasons why we wanted to do this webinar is to kind of help you start in the process of qualifying to buy one of these properties. We wanted to have the question and answer at the end. We ran out of time. Roy has been answering most of the questions on our chat, or all of the questions on the question and answer box. We will have a document prepared of all of your questions and all the answers, and we're gonna email it to everyone that is registered and participated on our presentation tonight. So I just want to thank everyone for coming in, and I want all the panelists to please put the cameras on so that we can just say thank you to everyone that came on to learn more about the land bank. And as I said, if you have any additional questions, please email us nlbinfo@investnewark.org. All of the questions in the chat, I'm going to put in a document, and I will share that information with everyone. And also the information on our panelists. Some of you were interested to know their contact information. I will share that with everyone. And any questions that you have in particular for them, you can also send it to nlbinfo@investnewark.org. Thank you. And